Very good evening to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountants of India, I welcome you all in today's webinar on the theme Checklist on Standards on Auditing. As we all are aware that the topic is very relevant and very important, and recently AASB had came out with the Checklist on Standards on Auditing. So we are trying our level best to disseminate the various aspects relating to this checklist on standards on auditing. Keeping in this in view, today we are organizing our first series of webinar on checklist, and we are going to cover our first series relating to this webinar, that is the relating to the general principles. And we are going to cover today SA200, SA210, SA220, SA230, SA240, 250, 260 revised, 265, and 299 revised relating to this checklist. And tomorrow again, we are organizing the second part of this webinar relating to this only checklist and relating to 300 series. And tomorrow again at 3 p.m. we will cover the various aspects of SA 300, SA 315, SA 320, SA 330, SA 402, and SA 450. And in order to tackle today's webinar, we are having two eminent personality, two eminent speakers from our Chartered Accountant fraternity, CA Parveen Kumar ji and CA Vikram Agarwal ji. So on behalf of AASB of ICI, I extend my warm welcome to both these speakers for today's webinar. So CA Parveen Kumar ji will deliberate on this SA200 series, and sir will moderate, and sir will give his expert opinion also. So with, before we formally start, it is my proud privilege to share with all of you the brief profile of our today's both the learned speakers. CA Parveen Kumar is a senior partner and national head of assurance division of ASA. The organization has 8 offices with 700 plus team members. He's a chartered accountant with over 30 years of post-qualification experience. He's a commerce graduate, holds diploma in information system audit, besides certification in IFRS from UK. He had been a member of NACAS, National Advisory Committee on Accounting Standards Board, Auditing and Assurance Standards Board, and Expert Advisory Committee, besides various research groups and committees of the Institute of Chartered Accountants of India. His experience of working on large number of risk advisory assignments, audits, forensic, fraud investigation, and IFRS transition for various corporate. He's a speaker at national and international forums on its subject of expertise. He's a faculty with reputed institutes like IMT, NAA, Institute of Chartered Accountant, Institute of Company Secretaries, Institute of Cost and Works Accountants, CAG, NIFIM, MCA, IICA, DU, etc. He has written a book on consolidation under IFRS, converged with Indian standards, besides papers and articles published in various renowned journals and magazines. He is invited to present paper by reputed institutions in Japan, Nepal, Myanmar, Dubai, Singapore, besides various large companies and branches of Institute of Chartered Accountants of India across the country. His personal hobbies includes marathon running also. So qualified in the year 2002, qualified company secretary in audit and taxation from the last 20 years. He's the founder partner of Messrs. Agarwal Vikram and Associates, and serving as an auditor to many corporate
Anilji, you may need to introduce Vikram sir again, because your voice was not audible.
Okay. Sorry for the interruption due to the technical glitch. Hope the voice is not coming properly. So I also welcome our speaker CA Vikram Agarwal ji. Vikram Agarwal ji is qualified in the year 2002, and he also qualified company secretary and cost accountant. Is the highest scorer award in company accounts from Institute of Company Secretaries of India, and doing practice in audit and taxation from the last 20 years. He's a founder partner of Mrs. Agarwal Vikram and Associates, and he is serving as an auditor to many corporate and non-corporate clients. So on behalf of AASB, I also extend a warm welcome to Vikram Agarwal ji on this platform, this webinar on the checklist on auditing standards. Before we start today's deliberation, I request Vikram Agarwal ji to please formally introduce this webinar as well as the importance of today's topic and enlighten all of us about this today's topic. Over to you, Vikram Agarwal ji, please.
Thank you, Anilji. Thank you. Good evening, everyone. On behalf of the Chartered Accountant of India, I would like to welcome all of you on this webinar on standard on auditing. As we know that the 7 principle of audit, which as a member of profession we need to take care of, one of these principles is continuous improvement. And as a member of the profession, we need to continue improve ourselves. The ICI is always very keen to empower its members deal with the rising challenges. As we know that the audit is the core strength of our professions. Although audit is not the core area, but still audit is the backbone of our professions. And in current scenario where the IT computer era, rapid changes in technology, we need to be more vigilant on our documentations. And as India is celebrating 75th year independence, and expectation of the government of India and stakeholders across the globe is very high. And the Institute of Chartered Accountant of India has come out with a very beautiful publication, which is called Checklist on Standard Auditing, which covers all the 38 standard auditing issued till date. The beauty of this publication is that it is in checklist form and available in one format for the convenience of our member. The publication contains detailed checklists on various audit requirements given the standard auditing. The publication also contains various notes to explain this checklist where they are deemed necessary. Today we have with us a very distinguished speaker, CA Praveen Kumarji, who will enlighten us about this checklist. So I request Praveen Kumarji to kindly enlighten us about standard auditing in correlation with this checklist.
Thank you so much. So, Anilji, shall we start?
Yes, sir. Yes, sir. So I request our today's speaker to please deliberate on the topic. Thank you so much, sir. And over to Praveen Kumar, sir, please.
Thank you so much, Anilji, and thank you, Vikram bhai. It's a great pleasure to be on the webinar of AASB. I will be sharing my screen and request you to confirm if my slides are visible.
Yes, sir. Yes, sir.
All right. So thank you very much. So this is a wonderful initiative by the Institute of Chartered Accountants of India. We have been waiting for this checklist for a very long time. And of late, there has been, a lot of members were asking for kind of a checklist, if that can be that can be made available. So finally, this checklist has been published by the Institute. And this will be available on the website, and all the members can download it and can use this checklist in order to complete their audits. So this is how it appears. This presentation is based on this checklist series 200. The disclaimers first. Whatever I am going to share with all of you is they are my own opinions, and for any professional call which you need to take, you need to discuss the literature, and you need to rely on the publications of the institute only. So what we share in these webinars is our own experience and explain what has been published by the institute in our own easy language. So this book starts with this this attention to the readers, which says that this is illustrative in nature, and members are requested to modify, or depending on the kind of audits they are doing, they need to apply their judgment. And this particular document, it neither supersedes nor a replacement of any guidance, pronouncement, or the standards which are issued by the institute. So tomorrow, in case you find that any additional information is required, or any base information is, or if you find that any conflict between what the standards say and what is required in this checklist, so please always remember that the standard or the guidance note will prevail. So you need to apply your professional judgment while using the checklist. This is only to help you. So the way these checklists have been prepared, they are covering all the auditing standards, individual standard, and this provides information related to what is the client, what is the assignment, what is the work paper reference number, then which period it relates to, prepared by whom, what date it was prepared, and there is a guidance on how to use the checklist. And also, there are example has been given that a manager or a partner can sign this checklist. And basically, it has given you clause-wise checking points, which all area you need to check. Please remember that when you are doing your audit procedures, you will need to carry out your audit procedures as per the guidance which has been given in the auditing standards. So as if you are doing audit of a company, section 143(9) of the Companies Act, it mandates that all the auditors need to apply auditing standards while doing their, statutory audits. So you need to keep that in mind. And you need to carry out your audit procedures in order to arrive at your audit opinion. So this is an example. So the way I have prepared this presentation for all of you is, I'll talk about very briefly about the standard, which is in the series 200. And then I will share some snapshots from the checklist, that how this checklist is going to help you in preparing your work papers, and how it is going to create an evidence for you in future. If some regulator or somebody asks you, how have you done the audit, you can always come back and say that here is our work paper. So this particular example, this you will find before, the way the structure is that this every standard, there will be a front sheet which will talk about the name of the client, work paper reference, which period it relates to, and it was prepared by whom, on which date, and then the signature of partners and the managers who have reviewed. So this will guide you, and this will help you in preparing your work papers. So we will be talking about these standards. SA200, which is on overall objective of independent auditors and conduct of an audit in accordance with the standard. So this is the base standard, is the SA200. Then SA210, it talks about agreeing the terms of audit engagements. SA220, which talks about quality control for an audit of financial statement. SA230 talks about audit documentation. SA240 talks about auditors' responsibility related to fraud in an audit of financial statement. SA250 is discussing about considerations of law and regulations in an auditing of financial statements. 260, which was revised also, it talks about communication with those charged with governance. SA265 talks about communicating deficiencies in internal controls to TCWG, and 299 revised auditing standard talks about joint audit of financial statements. So if you look at the recent reports of the regulators, and FRA, when they talk about whether the communication to those charged with governance was proper or not, whether the deficiencies in internal controls have been communicated properly or not. So the auditing partner, the engagement partner, needs to keep need to keep in mind the requirement of these auditing standards. So we will discuss these standards one by one. In case you have any question, you can put that in the chat box or put that in the Q&A section. And I'll be requesting Vikramji to keep collating, and I'll be requesting Anilji to keep those questions. So once we are, done with the presentation, then we will take those question and answers. And I hope we will have enough time for that. I'll try to keep the presentation quick so that we can address the queries and answer your questions. So please remember that these standards, they are not, they cannot be read in isolation. Just to give you an example, audit documentation, SA230. So while you will be carrying out the audit and you will be documenting all your audit procedures, so this checklist is also part of your audit documentation. You will also need to understand that when you are communicating to those charged with governance and you are applying your standards, which are SA260, you are also creating an audit documentation, which is guidance is given in SA230. And then once you are, agreeing with the terms of audit engagement and you're sending your engagement letters, you're receiving your appointment letters and you're sending your acceptance and getting the engagement letter signed, you're also complying with audit documentation, which is SA230. So all these standards, not only this series, but other series is also, you need to keep in mind that these auditing standards are all intervened. And once you are, when you are doing the audit, you need to keep in mind that all you are creating is an audit evidence. You're creating an evidence which will prove that you actually have carried out the audit. And by filling up this checklist and keeping it in the audit file, you are also, meeting the requirement of SA230, where your audit documentation is required to be maintained. Now you can maintain this audit documentation in the soft form, which is on MS Word or MS Excel files or any other tool which you are using, or you can keep it in hard file. It is perfectly fine to keep those audit documentation in hard file as well. Now, many people, they ask question that we are a small and medium practicing unit, and we may not have a requirement of complying with all the standards, but all the auditing standards. But please remember that whether your audit, the entity which you are doing the audit, whether it is a small, it is medium, it is large, please remember that all auditing standards are required to be complied with. There may be a situation that those particular part or the sections of that auditing standard might not be applicable in that entity. For example, in a smaller unit, smaller client, you may not have a separate audit committee and a separate management. You may have just a proprietor or a partner or a two directors in a private limited company. But at least communication has to be sent to people who are charged with governance. So you will need to comply with those auditing standards. So this checklist is going to help you, giving you all the guidances, giving snapshots, and also referring you to various clauses where the detailing has been given. But please remember, this checklist is a guide. It is a macro level guide. You audit procedures, how you will carry out your audit has to be done by your own self. And you need to, draw references from those standards which talk about how to do audits. But these, so these checklists, in any way will not replace your responsibility. So we'll talk about these standards one by one, and also I will share some snapshot just to give you an idea. It's a thick book, more than 380 pages. So you'll have to go through all the all the checkpoints. But this particular book is going to help you in complying with the auditing standard requirements. And it will be a really a very helpful guide for all of you. So standard on auditing 200, it gives you overall objectives. This standard talks about, in case you are conducting an audit, then SA200 advise that you will need to do audit in accordance with standards on auditing. So the scope of this standard, it talks about overall objectives of independent auditors. You will be, when you are applying SA200, it gives you an overall view. So establishing the general responsibility of independent auditor, it is applicable in all audits, including the obligation to complying with the standards. So this is mentioned in 230. So if somebody asks that where it is written that all the standards have to be applied, so this is given in SA200. So it also determines the nature and scope of audit, which is necessary for achieving those responsibility. Like I had mentioned, this standard, the auditing standards, they apply equally to audit of all entities, irrespective of their form, size, nature. So wherever you are doing audits, you will need to apply all the auditing standards. So what are the requirements? Primary requirements are that you as auditor will need to obtain reasonable assurance. Please remember, it is not absolute assurance, so you are not giving true and correct view. You are giving true and fair view when you are looking at the financial statement. So you are supposed to obtain reasonable assurance that financial statements are free from material misstatement, whether due to fraud or error. You as auditors are required to identify and make an assessment, of risk of material misstatement, which is based on the understanding of entity and its internal control system. You also, as auditors, are required to obtain sufficient audit evidence about whether material misstatements are existing, and you need to implement appropriate control, to mitigate the risk while you are doing your audit. So once you have done your audit procedures, you need to form an opinion on whether these financial statements, this opinion will be based on conclusion, when you will carry out your audit procedures. Like, senior people, they say that whatever audit evidence you have collected, whatever is there in your file, that will demonstrate whether you have carried out the audit or not. So if you say that, okay, I am a small practitioner, I have very limited staff. So I have seen the balance sheet myself. I've carried out, the ledger scrutiny. I have seen the vouchers, and I am very, very confident that there is no error, no material misstatement in the financial statements. And then you say that I am taking the responsibility as an auditor. It is giving true and fair view. I am very sure about it. This is what you have seen, what you have observed, what you have done. But you have not written down. If you have not written it down, and if the audit evidence, if those evidence of your checking is not in your file, trust me, nobody is going to believe that you actually carried out your audit. So whether you have carried out the audit procedures, whether you have seen, you have done the ledger scrutiny, whether you have done the vouching, whether you have looked into analytical, everything, you ask question, you got your answers, you are absolutely comfortable. But auditing standards want you to create evidence. If it is not there written and it's not there in your audit file, that means work has not been done. So you need to be very clear that whatever you are doing, you need to write down and you need to mention it. Write down means not only, so it can be, like I had mentioned, it can be soft form, it can be on the paper, but it has to be there in your audit work paper file. How you have concluded that, whatever opinion you are giving on these financial statements. So, how to conduct an audit? So independent auditor need to comply with all the standards on auditing which are relevant to that audit. there are some standards which might not be applicable. Like for example, SA299, talking about the joint audit. So if you are the only auditor of that entity, so that particular standard does not apply. So, but you will need to comply with all the auditing standards which are relevant to that audit. And independent auditors should have complete understanding of standards on auditing, including the application and explanatory. This is expected that once you are going to do an audit, the company law 143(9) requires you to apply the auditing standards. It is important for you to know these auditing standards, and this fact should be mentioned in the auditor's report. So when you will be we will be talking about SS series 700, and we'll be discussing various kind of reports, audit reports. So then you will be mentioning in the report that you have applied the auditing standards. Then each standards on auditing, they are giving you objective of that standard, and while doing the planning and while performing the audit, you as auditor will need to use all the objectives set out in that standards on auditing. And also, like I had mentioned, that there are interrelationships between the standards. So audit documentation and SA200, you need to understand that these standards, they are all interwoven. So you will need to see, you need to evaluate that your evidence has been obtained and those evidences are sufficient. So where in the checklist, when you are filling up the checklist, where you feel that this is not relevant or this is not applicable, then you will need to mention it in the checklist. So the way checklist has been done is para-wise. It gives you a guidance on what is supposed to be done and whether it has been done, yes or no, and then working paper reference number has been given. Now, there may be a situation that your audit objective, if it is not met, so if it is not achieved. So if the objective of relevant standard on auditing cannot be achieved, and it in turns, affects the overall objective of an independent auditor, then you need to either modify your report and you withdraw from the engagement. So like you have seen recently, one of the large entity, their auditors, they could not finish. They were not able to complete the audit, which was related to 31st of March 2022. So they finally resigned and saying that we are not able to plan or perform our audit, as required by standards on auditing. So they have actually, written a letter to withdraw from the engagement, and then the management of that company had to appoint the new auditors. So you need to see, this is what SA200 tells you. You need to carry out your audit in accordance with standards on auditing. You also need to understand and meet with the ethical requirements related to auditing of financial statements. You need to always apply your professional skepticism. I'll give you an example. So, if in one of the case study we were discussing, the client had some property which was given on rent. So the audit team went and the client said that this property was given on rent only till 9 months of the year. And after 9 months, the rent stopped coming. So the team member said that, okay, show us your bank statement. So there were 9 months of rent was there. So the team members checked that whether the TDS was properly, whether the tax was properly withheld or not. It was properly withheld. They had the TDS certificates. So the team said that, okay, we will take a representation from the company saying that the property was on rent for 9 months and for other 3 months it was vacant. Now, professional skepticism, when you apply professional skepticism, the auditor will ask a question that what is the evidence that for those 3 months where the revenue has not been booked, whether the property was vacant or not? Is there a possibility that the property was given to somebody else and the rent was received, in some other account, or whether it was received in cash? Whether there is a possibility that they were using the property for some other purpose? Whether there is a possibility that the same tenant was continuing as a favor without paying rent? So there are various possibilities which the auditor need to see, and they need to apply that professional skepticism, that what can be an evidence that this property was vacant for next 3 months as well. They might have an agreement saying that, okay, we are terminating the tenancy agreement. But what is the evidence for balance 3 months where the property was vacant, and what is the evidence? So when you will ask this question from the client, that they will say that, okay, what can be the evidence? I mean, it was vacant. So we do not have any evidence. So auditor need to apply their mind and do audit procedures which will give them a comfort, or which will create an evidence that, okay, these 3 months rent was not there. There can be electricity bill which will mention 0 usage of electricity. There can be a physical visit by the staff of the audit team looking at whether it was actually vacant or not. There can be other evidences also which can be collected. So you need to apply your professional skepticism when you are doing the audit, and also the professional judgment. There might be a situation where the company will say that, okay, we are estimating that this plant will run for another 20 years. But when you go and you see that, okay, probably the whole plant, the machinery which is being used to produce something, that has been totally outdated, and this plant might not run for more than 2 years. So you will need to apply your professional judgment on what kind of estimates the management is making. You will need to apply the audit procedures to obtain sufficient and appropriate audit evidence, because ultimately you are going to put a signature on a report, and you will carry some audit risk. You will carry some risk that you are mentioning that these financial statements are giving true and fair view. So you are carrying some risk, as tomorrow the regulators or somebody can come and ask you a question whether you carried out your audit properly or not. So this is something which standards on auditing are telling you. Now, this checklist will not tell you what is required to be done. So the checklist, like for example, SA240, this checkpoint, has the auditor obtained reasonable assurance? You will need to respond, yes, I have obtained reasonable assurance about whether the statements as a whole, financial statement, which is balance sheet, P&L, cash flow statements, they are free from material misstatements. And to report on financial statement and communicate as required by standard on auditing in accordance with auditor's finding. So what audit procedures are required to be done? That is not given in this checklist. That is what you are supposed to do. That is what your audit procedures are. That is where you will be collecting your work papers. That is where you will be collecting your audit evidence. This checklist will give you checkpoints on a macro level, that whether you obtained reasonable assurance, or in the next few questions which will you will need to answer yes or no, whether the auditor obtained agreement from management as and where appropriate, with those charged with governance, about they understand their responsibilities. What is responsibility of the management? To prepare the books of accounts, to maintain the internal controls, to protect the company from the frauds, and to prepare the financial statements. That is responsibility of the management, and they need to understand it. And whether you have taken a written representation from them, so that they understand their responsibilities. And, they have fulfilled their responsibilities. So whether you have taken MRL or not. So what MRL is should contain, that is, those charged with governance and communication with them. So there are different auditing standards which are giving you different guidances. But these checkpoints are there, to help you in understanding whether, you have carried out your audit procedures or not. And then para 816, this is a checkpoint given in the checklist. So these are snapshots from the checklist only, whether the auditor is independent of the entity. So how you will need to ensure that you are independent. So this will ask you whether it is yes or no. So when you say yes, you need to see whether you are actually independent or not. So there are guidance given in the Companies Act. There are certain services which you cannot do if you are doing a statutory audit. There are other requirements of, where you will be, you need to be independent. Now, where the auditor is independent or of the entity, you need to create an evidence, when you take a letter of independence from all your partners. So somebody can turn up and say that, okay, we are just two partner firms. We know each other. I know that this person has not taken shares in this company, and this person, there is no borrowing. So I am comfortable with it, but that's not sufficient. What you need to do is to still take a letter confirming that I am independent from both the partners and put it in the file. So then, next checkpoint is that whether auditor has tested the reliability of the source of audit evidence. So what audit evidence has been collected, whether the source of that audit evidence is reliable or not. So like, for example, if you are doing an audit, you say that, okay, I want to, do certain checks in this ledger account. So give me a ledger sheet or something. So client gives you an Excel statement that, okay, this is our dump of revenue. So whether you can rely on that or whether you cannot, that you need to see. You need to see the source of audit evidence. What is the source? How this information has come to you? So if you have, taken a confirmation, and this is very important point in your audits. So when you're sending confirmation letters to the bank, and the bank is sending you a confirmation, you need to see whether the source is, whether that confirmation is coming directly from the bank. So many times, in the past, what had been done was, auditors will go to the company and they would say, okay, we need bank confirmations. So company would say, don't worry, we will get you the bank confirmations. So they would go to the bank, they will take the confirmation letter and come back and give it to the auditors. And here are the confirmations from the bank. But what is the source of audit evidence? It has been given by the company themselves, but the auditing standards, they require you to take independent confirmation. And that is what happened in one of the large, audit failure, where, the confirmations were given by the management, and the audit firm, they relied on those confirmation instead of taking directly from the bank. So this resulted in a big, issue. So this checklist will give you a macro level checkpoints that whether you have carried out these kind of exercise or not. Then going to the next standard, which is agreeing on terms of audit engagement, SA210. This particular standard wants you as auditors to take, your engagement letter. You need to agree on the terms of engagement. So basically, it is responsibility of the auditors to agree the terms of audit engagement. So many times you say that, okay, I have received a letter of appointment, and this also gives all the terms. So we are continuing our audit. But it is very important for you to give acceptance of that, those terms. And it is your responsibility to obtain. So let's say in a small firm, there is a company which approaches this firm and say that we want our audit to be done. So company will send their, whatever records have been maintained in the software they send the email, and auditor will start looking at that, and they wait. And company assumes that the auditors will make the financial statement, will give us. And the auditor assumes that the company will send us the financial statements as well. But they had agreed on the fees, but they have not agreed on the terms of engagement. So it is very important. So whose responsibility is it? The auditor may say that the company should have given it in the writing, but no. The standards on auditing says that you as auditors, it is your responsibility that you need to have this, written engagement letter. It is the responsibility of the auditors. And then your objective, whether to accept the audit or whether to continue doing the audit, you need to understand whether, the preconditions of audits were present, and there's a common understanding between the auditors and the management. You will need to mention, in your communication, in your engagement letter, that responsibility of preparing, of maintaining the books of accounts and preparing the financial statement is with the management. That you have to put it there in the writing. And let's discuss what is precondition and what are the, what is meaning of the management. Precondition means that auditor understands, that management is using a financial reporting framework for preparation of financial statements, which is, acceptable to the auditor. And also the management also includes those charged with governance. And later on in our slides, we will also discuss that there can be a group, there can be a large setup where an audit committee is there, which is overseeing the function which is being done by the management. And then the audit committee and the people who are those charged with governance. So you need to identify what is meaning of management on case-to-case basis. Sometimes the management themselves are promoter, directors, and the people who are, charged with governance of the company. And sometimes there can be a large setup. Like, for example, if you are doing audit of a branch of a bank or, some large company, subsidiary of a large company, then you will need to see what is the structure of the management. And you need to agree which are the terms of the engagement. So what are the preconditions? Please remember that before accepting the audits, you need to understand that these preconditions are there. Acceptable financial reporting framework based on entity's nature and purpose, it should be there. And then you as auditors, it is your responsibility under standards on auditing 210. It is your responsibility to obtain management acknowledgement of their responsibility. They will mention it that the financial statements are prepared according to the financial reporting framework. There are internal controls. We have internal controls in our organization. They are existing to ensure there are no material misstatement in the financial statements. And then, the management will be able to provide unrestricted access to the information as and when required. So many times you may find a situation that management will say that, okay, we are willing to appoint you as auditors of our organization, but we will not be in a position to provide you information related to inventory because it is very confidential information. We will not be able to provide you the quantitative data. So you need to decide, that whether you are having a scope limitation, whether, you are having unrestricted access to the information. How will you check whether the inventory valuation has been properly recorded or not? So you need to see, whether you have some kind of restrictions or not. And this has to be done before accepting the audit. You cannot say that, okay, I'll accept the audit, I'll carry out the audit, and during the audit you say that, okay, why are you not giving the information? The management will say, we had told you in advance that we will not be in a position to provide you this information because it is confidential. We have our product which is very, very sensitive, and this information contains the ingredients of the product which we do not want to share with anyone, including the auditors. Then the auditors will be in a fix that why did you accept the engagement, knowing that there were restrictions or there were limitations in the information which you were about to receive, which you were supposed to receive for this arrangement, this audit engagement. Now, this standard, very clearly tells you as auditors that you should not be accepting the audit in case preconditions for audits are not present. The framework is not, like the preconditions which we had discussed in the previous slide. And this framework which the management is applying is unacceptable to the auditor. If that is the case, then you should not accept the audit. And the management does not agree with the responsibilities. So if management say, no, we will not prepare the books of accounts, that only you as auditor, we will give you everything. You make books of account, you make financial statements, you do the audit. Then you're not supposed to accept the audit because it is a direct in conflict with the responsibility of the, auditor. And basically, wherever there is a scope limitation, they will say that, okay, the management say that, okay, you are going to do audit. Please carry out the audit, but please don't look at the revenue part, because this we will ensure that whatever information you are getting, we have enough control procedures. So revenue numbers you don't need to check. But if there is a scope limitation that you are not supposed to, then how will you give your opinion whether the statement, financial statements are giving true and fair view or not? If those kind of conditions are there, if those kind of scope limitations are there, then auditors shall not accept. So standards on auditing are very clear that in such cases, you are not supposed to accept the audit engagement unless there is a regulation which wants you to carry out the audit. In that case, you will be giving your disclaimer that, okay, this area I have not checked, but because it was order of the court, so I carried out my audit in this particular manner, but I did not check that area. So you need to be very sure about whether there was a limit on the scope or not. Then the standards on auditing, this SA wants you to have this engagement letter. This should include objective and the scope of the audit. So the scope of the audit is to carry out the audit as given in the Companies Act, or whether if you have been appointed to do the tax audit, then your scope is to carry out audit as required under the Income Tax Act. What are your responsibility as auditor? To give an opinion on the financial statements and what will be the management responsibilities and what is applicable financial reporting framework. So this all has to be mentioned in your engagement letter, and that engagement letter has to be signed by the management. And in case you are continuing, like nowadays you have been appointed, you are being appointed as auditor for 5 years in case of a company which is non-banking and not NBFC. So you will be appointed as a recurring audit for 5 years. You will need to make an assessment that every year, whether there is a requirement of a fresh engagement letter in case there are any revisions in the audit engagement terms. Generally, we recommend that it is better to take a quick letter of engagement, even if you are continuing as auditor for recurring audits. But in case of change in terms, you must take engagement letter. Then let's talk about the checklist. What is so there's a long list of the checkpoints which are given. So has the auditor obtained agreement from management that it acknowledges and understands its responsibility on the following, which is preparation of book financial statements, implementation of internal controls to prevent frauds, to provide auditor with all the information, to any additional information which auditors may require, and unrestricted access to the auditor for having audit evidence. I'll give you an example, another example. So you are doing an audit, and this is a company which has appointed you to carry out the audit. You are doing the audit. You want to see what happened in the previous year, and the accounting staff or the controller or the finance department, they tell you that we cannot. This is out of your scope. I mean, you are doing audit only for 22-23. But the information which you are asking is 21-22. Why are you asking this information? And this is out of your scope. Why are you insisting on that information? So please remember that you need to create your own audit evidence. You may want additional information, and you may tell the management that I need it for the purpose of my audit. I need to evaluate the trend. I need to do comparison. And in case of restriction, you can immediately communicate, with those charged with governance that there is a restriction, and I'm not able to carry out my audit procedures. I'm not able to, understand that why there is a restriction on providing the information. Especially when you are in a large setup, there may be a situation that the client accounts team or somebody may put those kind of restriction. But trust me, when you go to the people who are responsible, ultimately they will make sure that those restrictions are not there. So agreed terms of the audit engagement have been recorded. This is also a snapshot from the checklist only, where your audit engagement letter includes. So you have to put a tick point whether your engagement letter is containing the objective and scope, responsibility of the auditor, responsibility of the management, identification of applicable accounting reporting framework, and reference to the expected form and content of reports. So this checklist will also guide you, to refer to specific paragraphs in the application guidance or implementation guide or that particular standards on auditing. For examples or reference, when you are preparing your audit engagement letter. And also, in the column which is next to yes or no column, you can also give your work paper reference number. Somebody, someone can come and say, but this will increase my audit work paper file significantly. That how can I have for each small audit, I need to comply with all the standards. But that is need of the hour. So you may not like to keep the printouts, but you always have a MS Word file or soft file which will contain all these information. Now, SA220 talks about quality control on audit of financial statement. Please remember that it is responsibility of the engagement partner to ensure that quality is maintained and quality on the audit is maintained. So basically, this particular standard 220 talks about responsibility of the engagement partner, responsibility of the engagement quality review partner, and what kind of procedures you need to have in place, where how you can ensure that the quality of your audit is maintained. The objective of the standard is to provide the auditor with reasonable assurance that the audit complies with the professional standards and the auditor's report is appropriate in all the circumstances. So when you look at the reports which were issued by NAFRA, in many places the observation is that even though the issue was mentioned somewhere in audit work paper, but how the auditor has concluded that was not there. So it was, the objection was raised that why the conclusion was not there. So please remember, if you receive a paper from the client, what have you done on that paper has to be written down, and how have you concluded. So, for example, many times the audit team will go and they will collect, let's say, for example, if there are fixed asset purchased or property, plant and equipment, if there was a purchase, they will obtain the invoices and keep it in the file that, okay, we have seen the invoices, there was a purchase. But what have you done with those invoices? That has to be written down. That's a audit work papers that you have seen, whether the date was there, you have evaluated whether the amount which was mentioned in the invoice is the same amount which has been entered in the books of accounts, whether you have compared it with the purchase order requirement, whether you have compared it. So what have you done? And what kind of, so in case you are doing test of controls, what kind of controls were applied when this invoice came, or when this property, plant and equipment, or this machinery was purchased? What kind of, so if you are doing test of details, then you will be going into detailing that how this entry was, how these transactions were recorded in the books of accounts. What have you done? So what have you done? Either you make a comprehensive chart and then mention that you have checked everything in this particular sample, or you will mention on the piece of paper what have you done. So in smaller audits, you need to please ensure that whatever is being done on that paper is being written there. So this particular standards on auditing, SA240, requires you, give you guidance on, what is the leadership responsibilities for quality of audit, what is the relevant ethical requirement, how the independence is maintained, acceptance and continuous of client relationship and other and audit engagements, and then assignment of engagement terms and engagement performance, then monitoring, how the monitoring has been done for this assignment. So what is the responsibility of the leadership? So basically, engagement partner in our environment, audit environment, it is responsibility of the engagement partner. You should really take responsibility of overall audit engagement, and ensure that compliance with professional standards and firm's quality control policies are there. And then engagement partners will always remain alert through observations and making inquiries as necessary related to non-compliance with ethical requirements or fundamental principle like integrity, objectivity, confidentiality, and professional behavior. And also, it will be responsibility to look into whether the independence has been compromised while carrying out the audit or not. There may be a situation that audit team is going there and the client is managing the audit team in such a manner that they are giving some favors. Whether that independence is being compromised or not, that's the responsibility of the leadership or the engagement partner or the audit team to see. They need to evaluate, the engagement partner needs to evaluate if there are, breach on identified, if there is a breach on independence. Then whether to continue or whether to accept the client, the audit, that is also need to be seen, and there has to be a control mechanism on that. Then there can be, so the team is being deputed by, let's say there's a firm with 2 partners and few articles. What kind of article is being deputed? What kind of training that person has got? What kind of capabilities that person has got? That is responsibility of the partner to see whether these people will be able to carry out the audit or not. And in case of complexity, they will be consulting with other professionals or the seniors, and they will be creating a documentation around that. Then giving direction and supervising the performance, and what review, what kind of consultancy has been taken. And if there are audit difference of opinion, so there may be a situation that engagement partner may say, may take a view. Like, for example, in case there is a situation where, the company is giving warranties. So engagement partner may come to a view that, okay, revenue has to be recognized in this particular format. And the engagement quality review partner may have a different view. Then how are you reaching to a conclusion? How are you documenting both the views, and what is the reason why have you accepted that particular view which has been taken? That has to be documented. So please remember that whatever is there in the file is ultimately the evidence that your audit was done and your consultancy was done. You had done the consulting. Monitoring is also required for all your audits. So your audit documentation, auditors will need to document the issues which were identified in respect to compliance with ethical requirements, conclusion on compliance with independence requirement, conclusion regarding the acceptance and continuous. So these all have to be documented. Like I mentioned, on one side, SA230 gives you guidance on overall guidance on audit documentation. But each of these standards will also give you guidance on what all documents are required to be maintained in the file. And EQR, what kind of papers EQR, engagement quality review partner, will need to maintain. Come to the checklist. You'll need to put a yes or no in the column, and then work paper reference, whether the engagement partner, while forming a conclusion, has obtained relevant information from the firm, and where applicable from the network form to identify and evaluate circumstances and relationship that might create threats to the independence. Yes or no, whether you obtained or not. What procedures have you carried out? That's your audit work paper, and then reference has to be given in the work paper reference. Then, has the engagement partner promptly reported to the firm any inability to resolve the matter? How have you resolved the matter with the engagement quality review partner? Or in case there are difference of views between the team members themselves, you need to really, create documentation around that. And especially the difference of opinion. There is a very much possibility that there may be difference of opinion with the management. There may be a difference of opinion between the engagement team themselves, or there may be a difference of opinion between the audit team and the people with whom you have done the consulting. How your firm's policies and procedures for dealing with these kind of difference of opinions. So you may say that, okay, as a small firm, or a medium firm, we might, rely on, or we will do these procedures. We'll do a voting, or we will go to the managing partner, and we will try to find a resolution to the whole thing. Then you need to mention it, record it in your work papers, that how have you resolved those differences of opinion. So before we go to the next standard, which is auditing, audit documentation, Vikramji, in case you have any questions, we can take those questions now, 1 or 2 questions.
Praveen sir, till now we don't have received any questions from any members.
Okay,
If
fine. So I can see there's a, okay, there are no questions as of.
yeah, I have one doubt which I have received from one member right now. He
Okay.
says regarding SA200, we suppose a partner engaging partner is demised while on the way to sign the financial statement of an entity. And new partner did not have sufficient time to verify the documents and other material aspects before signing the file statements. So what he can do right now in that case?
Yeah, this is very extraordinary situation. It's a very, very extreme, rare situation. There can be, consulting with the audit team, which was engaged for carrying out the audit. So the other partner, before signing off, can take the feedback, can look at the key issues, can look at the work papers, and then only, sign up the balance sheet. Please remember that.
But in any case, he cannot withdraw from the liability if he's going to sign the financial statements, right?
Yeah, that is for sure. That responsibility of audit work paper is with the engagement partner only. So the person who is signing off will need to ensure that all the papers are in place. So
Okay, in that case, he can get the extensions for signing the financial statement and go through with the working paper.
absolutely.
Right.
This is what SA230 will also talk about, the audit documentation, that this standard deal with auditors' responsibility in preparation of audit documentation. Although SA230 talks about audit documentation, but if you look at it carefully, all the standards on auditing, all the standards, they will talk about how to create.
How to create.
All these standards will talk about the audit documentation only. And then there is a mother standard which talks about that audit documentation is required. So what is objective of this standard? Objective is to prepare documentation that will provide sufficient and appropriate record for auditors report. This document will be an evidence that it was planned, audit was performed. So please remember, there were two things. One was audit was planned, and then it was performed in accordance with the standards on auditing and applicable legal and regulatory requirements as well. So the nature and purpose, of these audit documentation is whether the overall objective of auditors were achieved, whether the planning was properly done, who has done the planning, fixation of accountability and responsibility, who was supervising it, who was reviewing it, and retaining the record for future audits, and also conduct of quality control. So this standard also refers to SQC1 because, as requirement of that SQC1 is also that, you need to maintain all the audit documentation. Now, what kind of documentation is required to be maintained? That is explained in SA230, that it should be sufficient enough to enable an experienced auditor having no previous connection with the audit to understand. Now, this is where, the expectation gap is there between the society as a whole and the auditor community. When you look at the people who are looking at your audit file or who are questioning whether the audit was done or not, you are showing your audit documentation. And that person who is, an employee in that regulator's office, probably that person is not an experienced auditor. But that person is asking you a question, what kind of audit documentation you have collected. So that is where the expectation gap is. And that is where this guidance, this SA230 comes into play. These audit documentation, audit documents have to be prepared according to this SA230. It should enable an experienced auditors to understand, the nature, the timing, the extent of audit procedures, result of the audit procedures performed, and what kind of evidences were obtained, and what was the significant matter which which came out during the audit. So you need to identify characteristics of specific items, who performed the audit and what was the date of completion, who reviewed the report and date and extent of the review. Then what kind of document were created in order to discuss the significant matters. What is the nature of significant matters? How the inconsistencies were resolved? And in case there was a departure from the standard, whether the EOM paragraph was there or a qualification was there. So when I'm referring about the regulators, so experienced auditors, so let's say there is an oversight committee which is reviewing the work of auditors. The people working there, they have experience of looking at the audit work papers, so they are experienced auditors. But in other regulatory departments where they are just asking the auditors to come and show their work papers, those people might not be an experienced auditor. So these audit work papers. So this is an expectation gap which is there nowadays, and there are discussions happening. There are articles being written. There are researches being done. How to fill that expectation gap, that anybody who picks up the audit reports or who wants to look at the audit work paper, that person, whether that person qualifies to be an experienced auditor or not. And what is the expectation from them? What is what is their expectation from the auditor? So please remember, that nowadays you will need to carry out extended audit procedures to have that kind of documentation in your file, that it is, everybody should be able to understand what kind of audit was created, what kind of audit evidence were created. So please remember that, if you are doing audit of a very small entity, or you are doing audit of a very large, complex manufacturing unit with multi-locational presence, you need to keep in mind while preparing your work paper, the size and complexity of the entity. You'll also need to keep in mind the audit procedures, what kind of audit procedures are required to be done. I think, in my personal opinion, in our country, the problem is not of under audit, the problem is of over audit. So in smaller units, they will go and look at the whole all the ledger, all the accounts, they will do 100% watching, and then they say, okay, I am comfortable. But that's not what the audit is required. So you are supposed to carry out your audit procedure, and you need to see whether the financial statements are giving true and fair view based on the audit evidences which you have collected. What kind of audit procedures you have performed, that has to be documented. And risk of material misstatement, where exactly are the risk areas? And then your documents includes your audit program, your summary of significant matters, your memorandums, whatever issues which you have identified, what kind of letter of confirmation. These are just illustrative. There is a comprehensive work which is being done by the AASP on giving you help in creating audit work paper also. So many times, sometimes it may happen that you have issued the audit report and then something comes up, and then and that can be exceptional circumstances. I request Anilji, I think there is some echo happening, so you can ask your technical.
Yes, sir, it is fine now. Fine now?
Yeah, Anil, some echo is there.
But now it's fine, sir.
Now it's corrected now, I think. So you need to see exceptional circumstances, what kind of circumstances happened after you have signed as auditor, your audit report. What new additions you performed, what was evidence, and whether the audit documentation requires a change, whether you need to change your audit report, whether you need to recall that audit report. So this is a snapshot of the checklist. And this is something which is very, very critical. Even NAFRA and other regulators have also challenged the auditors. You need to complete your audit documentation in timely manner. That is something which you need to see. You cannot, create audit documentation once you start receiving an inquiry from a regulator. You have to complete the audit documentation within a time frame which is given in the auditing standards, and you need to collate your audit file within the time frame, and then you need to send your audit file in safe custody. Another checkpoint is whether the documentation of significant matters, they include significant risk area identification, difficulty in applying audit procedures, modification, in case your findings were resulting in modification. And then what were the result of your audit procedures, that, whether there is a possibility of financial statements could be materially misstated. So all you need to do is to put yes or no. And the reference to the work papers. Then your final assembly of audit file has to be done. And you can discard audit file only after the end of retention period, which is given in the standard. So this checklist also guides you to, specific documentation requirement in other standards on auditing. So it also guides you on FAQ, on implementation guide to standards on auditing 230, and also, so going to the next standard, standard on auditing 240, which talks about auditors' responsibilities related to fraud. These things are catching attentions of media nowadays. And, media is really highlighting in case there are any accounting frauds. SA240 deals with the auditor's responsibility. You need to identify the risk of material risk, identify and make an assessment of risk of material misstatement. You need to obtain adequate audit evidence and respond appropriately in case there are suspected frauds. So please remember who is responsible for prevention and detection of frauds. Please remember, it is responsibility of the management. Primary responsibility is of the management for prevention and detection of frauds. And auditors are not having a primary responsibility. Primary responsibility is with the management. They are required to take all necessary steps. So whenever you are facing any challenge, or so it is, of course, you need to carry out your audit procedures. You need to apply standards on auditing. But also please remember, because this is also one of the points for expectation gap, its primary responsibility is with the management only. So there can be two kinds of frauds, fraudulent financial reporting, and there can be misappropriation of assets. So when we talk about misappropriation of assets, it can be goods or it can be cash. And fraudulent financial reporting can be manipulation in the accounts. There can be intentional omission or misapplication of accounting principles. So there are many examples which are nowadays being highlighted everywhere. You can look into those financial frauds, financial statement frauds. So what are the responsibilities of auditors in such situations? So you need to obtain reasonable assurance, and you need to maintain professional skepticism. Like I shared my example, one example, which is related to whether the property was vacant or not. Then you must be aware the risk of non-detection of fraudulent material misstatement. And you should know that risk of non-detection of management fraud is greater than employee fraud. So if the top management is involved in the fraud, that risk is higher. It's so what is a requirement of for you as auditor? You need to apply professional skepticism. You need to make an assessment of risk. You need to discuss amongst the engagement team, and you need to make inquiries and other within the entities. So, and if you feel that there is exceptional circumstances, then you may decide whether what are your liabilities and whether whether to withdraw from the engagement. And if you withdraw, you need to first have a discussion with the management and those charged with governance, and whether when you are withdrawing, whether you need to make an assessment whether you have a professional legal or professional requirement to report to the regulators also. Please remember that you as chartered accountants are also now covered in the definition of reporting entity under PMLA. So you need to please make sure that wherever required, you need to make a report. So you need to obtain a written representation from the management that they acknowledge the responsibility is there to prevent the fraud, and they have disclosed to the auditor, they have disclosed whether they have any knowledge. And then, you need to also remember, your communication with those charged with governance. And also, you need to remember that there is a section in the Companies Act 143(12). You need to communicate in case you find any frauds. Maybe in some other session, we'll go into detailing of what kind of communication is required. But as far as the standard on auditing is concerned, you need to document how you have identified the risk, how you have addressed the risk, and how what kind of audit procedures have been carried out. So this checklist also gives you a snapshot of these auditing standards. It also says that there are inherent limitations where unavoidable risk of some material misstatements which will be there. So these checklist will also provide you like whether the risk assessment and planning discussion had been carried out. Yes, no, and if yes, then what is the work paper reference number? Then has the auditor identified and assessed the risk of material misstatement due to fraud? Yes, no, and then if yes, then what kind of minutes? And this standards on auditing, this checklist will also give you Appendix 1, 2, and 3, which talks about examples of risk factor of financial reporting frauds or misappropriation of assets, and example of possible audit procedures, specific response to revenue recognition, inventory, or management estimates, or so what kind of circumstances, what kind of examples which indicate the possibility of. So these are the annexures which you can use when you are looking at this book called checklist. Then 250 SA talks about compliance with law and regulations. This is something which all the auditors are doing, and this is one of the most favorite topic. When the audit team goes for doing the audit, they will immediately go and check whether the TDS was properly done, whether the GST was properly done, complied with, and this particular standard is being applied maximum by smallest of the audit firms on smallest of the audit clients. So your responsibility is not only to obtain your TDS returns and compare it with the books of account, but also to create an evidence what all checking have you done. So you need to identify the risk. Of course, all of you are doing it, that in case there is a non-compliance, what can be the impact? And this is sometimes it is overshadowing the all other audit procedures. But basically, when you're doing I have seen that many people, they go in detail, they do substantive test in, checking whether all the TDS, everything has to be GST and company law compliances. So all the procedures are being done. All you need to do is to remember that SA250 talks about, and it gives you responsibility of reporting the non-compliance, and documentation has to be done. The checklist gives you overview of what has been done as auditor consideration of compliance with law and regulations. So you need to mention whether you have obtained general understanding of legal and regulatory framework. So if you are doing audit of a branch of a bank, you need to understand what is guidance given by RBI, what are the latest circulars, what are the prudential norms, and whether the entity is complying with that framework. So you need to put a checkpoint. Then communication with those charged with governance is also an important standard. And regulators have, in many reports, they have raised a question that auditors are not properly communicating with those charged with governance. So this standard on auditing promotes two-way communication between the auditors and those charged with governance. So many times the auditors say that we have made a presentation to the audit committee and that is enough. But in that presentation, what have you communicated with the the audit committee or those charged with governance? That is something which you need to be very carefully be aware of. And your responsibility is to mention and to communicate how, what kind of audit you have planned, what was the scope, what was responsibility of the management, what is the responsibility of the auditor. You also need to communicate what are the significant findings and whether you are independent, and you need to disclose in case there are any relationship between the firms or in case you are part of a network firm. And you have to communicate whether the safeguards were implemented. And this communication has to be in writing. Writing can be on PowerPoint presentation, it can be in form of a letter, but please remember it has to be in writing, and they can agree, the auditor can agree with those charged with governance that we will be making a presentation. So it is good to have at least once in a year communication without the presence of the management, if people who are those charged with governance have a responsibility to oversee. So that means in very large companies, it is better to have a meeting with the audit committee or audit committee chairman or chairperson, without presence of the management, and encourage and promote two-way communication process. All this communication has to be documented, and this checklist also tells you that whether the auditor communicates with the subgroup of those charged with governance. Yes, then the auditor determined whether the auditor determined whether there is a need to communicate with the governing body or not. That can happen in case you feel that people who are part of the that subgroup, they are also so if you feel that there is a need to have a communication with the governing body also. And this standard also gives you guidance on whether auditors are communicating additional information to those charged with governance, whether you need to have a modification in the report, whether there is a going concern issue, what are the key audit matters, whether there is EOM paragraph, whether there is uncorrected material misstatement. All these things need to be communicated. So different standards on auditing, SA705, 570, SA720. So you need to have a communication with the those charged with governance. Then deficiencies in internal controls have to be mentioned to those charged with governance. And there may be a situation where auditors, there may be a situation that auditors are required to make a separate report. And there may be a situation they are not supposed to make a separate report. But in case there is a significant deficiency, you need to communicate with those charged with governance in case you are finding any deficiency. So this checklist also provides you, whether information as additional context of the communication. People who are charged with governance need to know whether you as auditor were able to find or whether you observed any deficiency in the internal controls. So the last standard talks about joint audit of financial statements, SA299, which provides you principles of conducting a joint audits. And this is something which is very important and very much relevant in Indian scenarios. Basically, the objective of the standard is to lay down broad principles, what kind of responsibilities the joint auditors will be having. So identify the area of work where one auditor and the other auditor or the joint, if there are various auditors, which areas they will be picking up, what will be their responsibilities. So they need to develop an audit plan. They need to make a risk assessment of the risk. They need to allocate work between each other, and they need to document. Remember, SA230 and 299 also talks about that whatever allocation has been done, it needs to be documented, it needs to be signed off, and it needs to be communicated to the management and those charged with governance as well. So it is better to have your responsibility statement signed off by all the auditors and also signed by the management. Then there are some responsibility which are individual responsibilities where the work has been divided, and there are responsibilities which is joint and several responsibility of the joint auditors where the work was not divided. There are common areas, where they have communicated with each other, and where auditing. So basically, common management representation letter is there. You need to identify what will be the responsibility of each one. Then reporting requirement, generally, we see that joint auditors, they jointly give the report, but there may be a possibility that one of the joint auditor may like to give a separate report. That is also permissible. So you need to create a documentation of joint responsibility statement. You can have engagement letter, which can be common, which can be management representation letters, and then minutes of the meetings need to be there. So the checklist provides whether the engagement partner and other key members of the engagement team were involved in planning the audit, both if there are many, then all the joint auditors, whether jointly established overall audit strategies and sets the scope. So this is what I wanted to share with all of you. I will be glad in case, I'll be glad to answer in case there are any questions. So I can see that there are some hands which are there, and I can see Anilji ready with lots and lots of questions. Vikramji is also smiling. I think the session was heard by people. That's why they have asked questions.
Unmute kar dijiye. Hemilji, can you hear me?
Yeah.
Thank you so much, sir, for such a wonderful deliberation. And successfully, we have done this, our first part of this checklist on auditing standards, and you have covered all these standards, and you have given us the way how to, while the auditing, how to implement all those standards. Sir, I have received certain questions, and certain questions are with Vikram Agarwal ji also. So first question is, sir, one member is asking, can you put some light on discussion on auditing standards which are applicable for banks?
Applicable for?
Banks.
So I had shared a slide, said that all the standards on auditing are applicable on all the audits, all the entities. So all the standards are applicable in case of banks.
Yes, sir. Sir, is the documentation requirement in SA230 applicable to EQCR regarding the nature, timing, and extent of the review?
Yes, sir. It is very clearly mentioning what are the responsibilities of documentation, uh, what are the responsibility of auditors to document how the frequent quality review partner have done the reviews and what was the timing, what was the date. So when we prepare audit work paper, it will mention that question was any reports.
Yes, yes, sir. Sir, as the auditor to give opinion free from the misstatements either due to the fraud or error, how does primary or secondary responsibility matter? Please help in this, sir.
That is something which is being discussed across nowadays because if frauds surface, first question goes to the auditor who has done the audit and bringing you. So the standards on auditing clearly say that primary responsibility of preventing and detecting the fraud is with the management. Auditors come later on, right? So it is who is setting up the internal control system in the organization? The management. Who is so if I am putting my investment in the company, who is responsible that there should not be any fraud in the company? It's the management first. It's not that auditor are going to set up those systems and will ensure that fraud will not happen. But nowadays, a lot of people are straight away going to the auditors and asking questions that fraud happens, what were you doing? But please remember that there's a primary responsibility is with the management, and then the auditors will come and see whether their auditor their auditing procedures, whether they were able to detect frauds and they were able to report that, whether their audit procedures were able to find those kind of frauds or not.
Yes. So one member is asking about where we have uploaded this link for this audit checklist. So I would like to apprise you that in the institute website under the Auditing and Assurance Standard Board, very first pop-up is blinking over there. That is the audit checklist for the auditing standards under our Auditing and Assurance Standard Board website. So when we will click the ICI, then we will go under the Auditing and Assurance Standard Board. Then on the right hand side, we are having the first pop-up blinking, that is the checklist on auditing standards. So for the rest of the questions, I request our learned speaker, C. Vikram Agarwal ji, to please, you are also having certain questions for Praveen ji, please.
Thank you, Ranjit. Thank you so much. Such a nice derivation, Praveen sir. I think you have checked all the questions of the members without asking. Still, we have some questions. It's a very common question, but still, it's my duty to ask you. There is SA210 talking about component auditors. What is just mean at component auditors? And it is a component auditors can also be the statutory auditors.
Can you please repeat the question again?
SA210 is talking about component auditors. What is component auditors? And can component auditors also be statutory auditors?
So component auditors are always statutory auditor only. So suppose there is a holding company and there is a subsidiary company. So holding company, the consolidation, and there is a main auditor who is doing audit of the holding company. For the auditor who is doing the audit of a subsidiary company is called the component auditor. So who is doing audit of one component, but that auditor is the statutory auditor only.
Okay. Okay. There is a very another question. It is mandatory to take engagement letter every year. However, there is no change in terms and condition, but there is a slight change in management.
Yeah, it is better because the situation has changed. So it is better to take engagement letter every year.
Have you my question, sir?
Yeah, it is better to take a revised engagement letter, a fresh engagement letter every year.
SA230 पे one question है, sir. The matter arising after the date of audit report, how an outgoing auditor documented the same, especially the management did not permit to verify the documents.
So SA230 talks about very, very exceptional case. And
your voice is breaking, sir.
Yeah. So Vikramji, your net is slightly weak. So It is. Can you hear me now?
Yes. Yeah, I can hear you.
Yeah. So that after the audit report, those are very, very exceptional cases. And if you are a continuing auditor, then you will have an access to the information. If you are not the continuing auditor, then it provides additional challenges for you. So many times you may be asked to give a consent on the previous audits which were done. So once you have signed off the audit report, after 1 year, if the company is going for IPO or something, you might be asked to give consent on the audit which you were done earlier. So you need to look into the area after the audit report was signed off until now, whatever has happened, whether there is going on. Yeah, I can
think
see
voice is
you muted
breaking.
also.
Yeah. The another question is, does the manipulation in stock statement submitted to the bank to enjoy higher DP limit, however, there is no sign of siphon of the fund, is amount to fraud?
This issue was addressed in the new CARO now, because now the auditors have to mention in whether the quarterly stock
Yeah, it is duly covered.
to the bank, whether they are matching with the books of accounts. Yeah, Vikramji, you have got muted.
Another question.
Any other question,
No,
sir?
sir. I am okay now.
Sir, any other question? Vikram sir, any other question?
Yeah, more question. In a small and medium enterprises where there is no, are you getting my voice, sir? I am audible.
Yeah.
Yes, sir. There is a internet bandwidth problem in your side, sir.
Praveen, sir, I am audible.
Yeah. It's breaking, but
In a
it's
small and medium enterprises where in a small and medium enterprises where there is no mechanism for internal control, how can an auditor report the same individual?
So internal control will always be there. The challenge might be that might not have been documented, because there is a possibility that it's a partnership form. So one of the partner is checking all the bills and all. Internal controls will be there. So environment will be there, but probably that documentation might have been might be a challenge. So auditor need to see whether that internal control environment is giving comfort or not, and then auditor can do the documentation of whatever audit procedures they carried out in order to reach to the opinion whether it is true and false.
Right. Thank you, sir. Arunji, my side is over. Right to you.
Yes, sir. Thank you so much, sir. Now we have come to an end. Thank you so much on behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India for sparing your valuable time. And we have gained a lot through your deliberation, Praveen, sir. And once again, from the core of my heart, as well as on behalf of WSB of ICI, I extend my warm thanks to you, sir, for sparing your valuable time and enlighten all of us on various intricacies on this first part of standards on auditing checklist. Thank you to Vikram sir for spending your valuable time and moderating this event very successfully. So once again, thank you, sir, and thank you all the participants for today's webinar. Thank you so much, sir. Namaste.
Thank you, sir. Thank you.
Thank you, sir. Namaste.